What's going on, everyone? We have a new filing to talk about. It is SR-NSCC 2021-015. Let's go ahead and take a look at what this one's all about. Probably more crime, right? So this is the filing here. It was filed today. Modify NSCC rules to remove mutual fund deposit requirements and remove certain other provisions relating to clearing fund requirements for limited members. NSCC, what doing? Purpose. The proposed rule change consists of modifications to the rules to remove the requirement that members in mutual fund/insurance services members pay a mutual fund deposit into the clearing fund relating to mutual fund services, remove provisions relating to the mutual fund deposit and the insurance deposit, and remove a provision relating to establishing a clearing fund requirement for NSCC members that currently do not have a clearing fund requirement. The proposed changes are described in greater detail below. Purpose: mutual fund deposits. As part of its market risk management strategy, NSCC manages its credit exposure to NSCC members by determining the appropriate deposits to the clearing fund and monitoring clearing fund sufficiency as provided for in the rules. The deposits to the clearing fund serves as each NSCC member's margin. So the clearing fund is each individual member's aggregate required supplemental deposit and required fund deposit. The objective of an NSCC member's deposit is to mitigate potential losses to NSCC associated with the default by an NSCC member. Pursuant to the rules, each NSCC member's clearing fund deposit amount consists of a number of applicable components, each of which is calculated to address specific risks faced by NSCC as identified within Procedure 15. One of the required components is a mutual fund deposit that is required to be paid by mutual fund/insurance services members and members that use mutual fund services and which is intended to address risks relating to the use of mutual fund services. Section 13 of Rule 4 requires that mutual fund and insurance services members and members that use mutual fund services each make a cash deposit to the clearing fund referred to as a mutual fund deposit in the amounts determined in Procedure 15. Section I-A4 of Procedure 15 requires that each member uses mutual fund services pay a mutual fund deposit ranging from $5,000 to $20,000 based on the amount of mutual fund services settlement debits such member has with respect to any one another fund member. Now, Section IC of Procedure 15 requires that each mutual fund or insurance services member also pay a mutual fund deposit ranging from $5,000 to $20,000 based on the amount of mutual fund services settlement debits such mutual fund or insurance services member has with respect to any one fund member. The risk that the mutual fund deposit is intended to address is a loss incurred by NSCC relating to a default by a member or mutual fund/insurance services member using mutual fund services. Mutual fund services is a non-guaranteed service of NSCC, which means that NSCC does not guarantee the payments as settlement for transactions processed through mutual fund services. In the event of an NSCC member default, transactions processed through mutual fund services by that NSCC member may be reversed, including any credits owed to any counterparties with respect to such transactions. Therefore, a loss to NSCC could only occur with respect to transactions in mutual fund services. If an NSCC member defaults on payment, NSCC makes a decision to proceed with settlement despite the default and pay the credits to the counterparties, and then subsequently, NSCC is unable to recover the funds from either the defaulting NSCC member or the counterparties. Such a situation is referred to as a double default. NSCC put the mutual fund deposit requirement in place to address the most risk of loss related to a double default in connection with mutual fund services transactions. So stonks are guaranteed, mutual funds and insurance services are not guaranteed. Now, NSCC has never needed to use the mutual fund deposits to recover a loss and has never incurred a loss relating to an NSCC member defaulting on mutual fund services transaction payments. In addition, the amounts of the mutual fund deposits no longer correlate with most of the settlement amounts in mutual fund services. The current requirements for the mutual fund deposits from $5,000 to $20,000 has not changed since the mutual fund deposit was implemented in 1988. In the remote circumstance where NSCC did incur a loss relating to mutual fund services, the amounts of the mutual fund deposits would not likely cover the amount of such losses. Therefore, NSCC is proposing to remove the requirement that members use the mutual fund services and mutual fund/insurance services members pay the mutual fund deposit. So don't worry, no longer an obligation. Cool. Now, in addition to the previous requiring members of mutual fund insurance services to pay a mutual fund deposit, Section 13 of Rule 4 contains provisions stating that the fund members may be required to make a mutual fund deposit in accordance with Procedure 15 and other applicable rules and procedures. Section 14 of Rule 4 has a similar provision stating that insurance participants may be required to pay an insurance deposit in accordance with Procedure 15 and other applicable rules and procedures. NSCC believes that the provisions relating to whether it may require an NSCC member to pay a mutual fund deposit or insurance deposit, and that it shall establish a clearing fund formula for fund members, insurance carrier and retirement services members, and mutual fund insurance services members who use insurance and retirement services are unnecessary and may be misleading, since NSCC currently has no plans to establish such requirements. Given that NSCC would no longer be requiring members of mutual fund or insurance services members to pay mutual fund deposit, and to avoid confusion relating to whether any other NSCC members would be required to pay a mutual fund deposit or an insurance deposit, NSCC is proposing to delete the provisions relating to mutual fund deposits, insurance deposits, and statements relating to whether NSCC shall establish a clearing fund formula for fund members, insurance carrier and retirement services members, and mutual fund and insurance services members who use insurance and retirement services. Jesus, filing's a bitch. Okay, so we're to the proposed changes now. NSCC is proposing to delete the definition of insurance deposit and mutual fund deposit in Rule 1 and delete sections 13 and 14 of Rule 4 to remove the provisions relating to mutual fund deposits and insurance deposits. NSCC is also proposing to delete Section 1A4 of Procedure 15 to remove the requirement that members that use mutual fund services pay a mutual fund deposit, and delete Section 1C or IC of Procedure 15 to remove the requirement that mutual fund and insurance services members pay a mutual fund deposit. NSCC would also delete Section ID of Procedure 15 to remove the statement that NSCC shall establish a clearing fund formula for fund members, insurance carrier, and retirement services members, and those mutual fund insurance services members who use insurance and retirement services. Implementation. NSCC expects to implement the proposed rule change on or prior to January 31st, 2022. As proposed, a legend would be added to Rule 1, Rule 4, and Procedure 15, stating there are changes that became effective upon filing with the Securities Exchange Commission, but have not yet been implemented. The proposed legends would also state the date by which such changes would be implemented, the file number of this proposal, that NSCC would issue an important notice when the changes are implemented, and would state that once this proposal is implemented, the legend would automatically be removed. In essence, the proposed changes would not be adding any obligations on NSCC members that are using NSCC services. As such, the proposed changes would not impede any NSCC members from engaging in the services or have an adverse impact on any NSCC members. Moreover, the proposed changes may promote competition because the proposed changes could enhance participation in mutual fund services. Well, no shit, by removing the obligation to pay a mutual fund deposit. So don't worry, no deposit required. Just come buy some mutual funds. Awesome. Less obligations, more crime. Yeet, let's go.